All right, hello, and welcome to the Yet Another Value podcast. I'm your host, Andrew Walker, and today I'm excited to have for the second time on the podcast, Abdullah from MDI Deep Dives. Abdullah, how's it going?
Pretty good, pretty good. Thanks for inviting back, Andrew. I've enjoyed my first appearance, and I'm glad to be back.
Well, look, you're a Yet Another Value pod success story because you came on the pod last time. MBI Deep Dives, I think it was you were just about to put out your second issue, if I remember correctly. Hadn't turned on the paid service since then. I'll just dive into the pitch for you, which is the way I start every pod. Since then you've turned on the paid service. It seems to be going really well. I'm a paid subscriber. I've really been enjoying it. Not disappointed at all. You do one deep dive into a stock per month, and it is a real deep dive. I think your last one on Autodesk, which we'll talk about, was 24 pages or so. And, I think the highest praise I could actually give is as I was prepping for this pod, I was rereading the report and I would be writing out bear questions or pushback cases and all these types of stuff. And almost every time when I wrote one, the next paragraph would say, hey, I know the bear case to the point I just made would be this, but let me address it. So I was like, oh gosh, darn it. Like my whole job's been done, but you were really doing a great job of anticipating the bear cases. And I think that is the sign of a really well thought out research service. And, if you subscribe to MBI Deep Dives, which I would encourage everyone to do, I think that's exactly what they can and should expect. So I don't know, I'll pause there and, anything else to add to that, or do you want to pump yourself up even higher?
No, I think you have done more than a reasonable job, and you have been very kind and gracious, from the very beginning. The one thing that I can probably add to what you have said is, ever since I launched MBI Deep Dives, I have come to appreciate how much people want to know your opinion, right? So I think my subscribers clearly understand that I'm not an expert. I'm not an expert on HC. I'm not an expert on Autodesk, right? I'm a generalist. So if you're a generalist, I'm pretty sure I'm speaking on behalf of all the generalists out there. It's uncomfortable, right? And that you don't know a lot of things that you probably should know, but you still kind of deal with that discomfort and still kind of want to tackle the problems that you have. And what I really appreciate, despite the fact that I may not have the, a depth of expertise, what people probably much more appreciate that, people want to know what my opinion is on a particular company I'm looking at. And sometimes they don't agree with my point of view, but that's fine, that they're still getting my point of view. And, if people think that you are a thoughtful, intelligent person trying to understand something diligently, and I think people appreciate that much more than your apparent expertise on a particular field or company or sector.
I really like that thought on generalist versus expertise. So look, I think there are some sectors where you have to be an expert, right? Like if you're investing in startup biotech and you're doing it with the generalist framework, like that's a prescription to get your Facebook. Right. But I do think like Twitter is one that, I've done a podcast on, we've talked a lot about. And I do wonder, like, there are some people who are experts and they can go in and they can give you all of this stuff on all of Twitter's different, like, very technical things and stuff. And I do wonder if almost taking a generalist expertise to Twitter and a bunch of other companies is better, right? Like, it's not, hey, I need to know exactly how the back end of Twitter's ad product work. It's much more, hey, I have a general understanding that Twitter has some technical debt that they're accumulating, but I can see the whole picture and come in and, apply a bunch of different frameworks and see how Twitter strategically is working and how they're accelerating or not accelerating or whatever. But I do wonder for, 80 to 85%, if bringing that generalist mindset, it can be uncomfortable because an expert will come to you and say, hey, but did you know, like, Twitter's map product, that's 2 years behind where Google's product is.
Right.
It can be uncomfortable, but I do wonder if that's really the way to approach most, not all, but most.
I absolutely agree. I think as a generalist, what I really insist upon is not to miss the forest for the trees, right? Yeah, that's like the number one goal for, I guess, most generalists out there. But you're absolutely right. There are lots of, details that, we probably don't know much about, right? Yeah. It can be uncomfortable. Like, sometimes obviously everyone can be wrong. Most analysts will be wrong, multiple or more than multiple times, like in their analyst careers. So, and in many cases, you will find out that, maybe what you thought was not so important turned out to be pretty important, right? That's how generalists usually get things wrong.
Yeah.
So that's why it's uncomfortable. Like, is it really the, you tend to kind of convince yourself, oh, I'm looking at the, forest, not the trees. But at times, those trees can be important that can burn down the whole forest. Right?
Yeah.
So it's kind of that's why I keep, saying that it can be uncomfortable, but sometimes, that specialists can get trumped by the generalist kind of, broader view, and just being able to like see multiple sectors, multiple industries, and not being tied to a particular industry throughout your life,
Yep.
Can be eye-opening and can be liberating at times. So there's a place for both specialists and generalists in the world. I'm definitely not going to tell that everyone should be generalist, and then all the biotech, nobody's going to be able to tell like what you should do with the biotech companies if everyone becomes a generalist. So there's obviously place for both kind of group of people to coexist.
Well, speaking of specialists versus generalists, I think you put it in your write-up on this company, but it is a little strange for you and I as investors to be talking Autodesk, because Autodesk appeals not appeals. They are a product for engineers and architects and everything to design things. And I have never used an Autodesk product. I feel like I have a good grasp of what they do in the fundamentals, but it is a little weird to be talking about an engineering company and not have actually really used the product or subscribed or anything. But that out the way. Let's.
You know what, Andrew? Let me just stop you there, and I want to give you a full disclosure. I'm not an engineer myself. I have also never used AutoCAD products, and if any engineer out there, listening to our conversation, I'm pretty sure they're going to find a lot of faults, a lot of, probably misstatements. But hopefully, we're not going to, we're going to see the forest pretty clear together, even if we get some details wrong in terms of the product.
Well, why don't I think that's a great jumping off part. Your post, I think the headline was great. It's Autodesk, the horse for the infrastructure decade. So why don't we kick it off? For the other generals out there, who and what is Autodesk? What do they do, and why are they the horse that will kind of drive the infrastructure decade?
Right. So most people probably have heard about AutoCAD, more than Autodesk. A lot of my friends who are like not in like software or like engineering space, like they told me, oh, AutoCAD is actually Autodesk product. Like I didn't know that something like Autodesk even exists, right? So AutoCAD is widely known, much more widely known than Autodesk. So I would say Autodesk is a global leader for computer-aided design, computer-aided manufacturing, computer-aided engineering space. It's a pretty global company. 67% of its revenue come from outside the US, right? So you understand how the global nature of the company. It based the software products that Autodesk has, and it's not only AutoCAD but also Revit, which is also like pretty big company. It's actually Revit is actually the single biggest revenue driver for Autodesk. So AutoCAD, Revit, Maya, 3ds Max, Inventor, Fusion 360. So they have like 70, 80 products, software products, but essentially these 6-7 products are what they drive majority of the revenue. And these products basically allow you to design, fabricate, manufacture, or build anything, by allowing you to visualize and early in visualize and or simulate early in the design process to kind of be able to see what it will look like after kind of the thing is built or manufactured. So that's what in general what these software products do. And yeah, it's actually a pretty old company. It's not some up and coming software company. It was like launched in 1982. John Walker, who is the like founder of Autodesk, he basically convinced like 12 other engineering friends to pull like $59,000 together, and 40 years later, it's like a $60 billion company. So yeah, and from the very beginning, they were going after the CAD market, computer-aided design market, right? But from then on, from those early days, it has kind of expanded its horizon to go into manufacturing, construction, engineering, architecture, as well as like media and entertainment space as well. So it has become sort of a global and multi industry focused as a company over the last like 3-4 decades.
So when I was in college, everyone used to always, that is an increasingly long time ago, but everyone used to always feel bad for the architecture students because, at the end of the semester, all the architecture students were pulling, all-nighters constantly to get whatever their architecture products done were. And my understanding, tell me if I'm wrong, but my understanding is they were almost certainly, I think it's Autodesk Revit is probably what they were using, but they were using an Autodesk software to build whatever hypothetical building they were going to be turning in for their final project. So, you could extrapolate that to, if you are an architect and you are designing a building, you are probably using an Autodesk software to design that building, and that's what you're going to build all your plans on. Am I thinking about that correctly?
Yes, you are absolutely thinking it right. And that's a very conscious effort from Autodesk's part to kind of encroach into all the universities in the world, to make sure all the engineering students, all the architecture, architects, future architects of the world, start using Autodesk products. And it's given for free for if you're a student, it's free for you. The idea is to kind of get you used to that product. Think about like Excel. Like if I ask you, like I have some better product that is much better than Excel, you just have to be able to like put in, let's say, 2 months of work to kind of learn how to use that software, and then you can switch from Excel to, let's say, that up and coming software. My guess is you're probably not going to say yes to that, right? Unless it's like 10x better product, right? So that's like the goal for Autodesk, to kind of make sure every student out there starts using Autodesk product, and so that when they become professionals, right, they don't want to switch to some competing product. And even the companies or the professionals in the workplace, they also understand that, and people get used to that, and they are also used to that. So they, so it's a kind of a high switching cost that's embedded. And it's funny because Pat Dorsey, in his book, like 5 Successful Rules for Investing, he specifically highlighted Autodesk as an example for high switching costs, right?
Yep.
And this strategy that you go into universities, colleges, and trade schools, and and give your software product for free, so that they know how to use it. And once they know how to use it, that human inertia kind of takes over. So unless and until the competing products are like 10x better, you have very little incentive to kind of move to a competing product.
Yep, and it's it's funny that the Autodesk model and the Excel model get the people trained when they're students and they grow up and they'll use your product. I mean, it seems like so many people, like I think Twilio is really big into get engineers trained when they're at a startup to use our products, because when they go and do their next thing, or when the thing grows, everybody will be used to that standard. But the other interesting thing is you mentioned Excel, which I agree with, and maybe we're jumping a little too far ahead here, but the other interesting thing about Autodesk products is a lot of their files, I think it's like .rev is the way they share. And very similar to Excel, hey, if you go make a startup that's cheaper, better than Excel, there's switching costs, but there's also anti-network effects, right? Because everybody else uses Excel, they send things in Excel files. I think Autodesk has a lot of that going for it too. Am I thinking about that correctly?
Yes. There's definitely, network effects is certainly an overused word at this point, right? We tend to probably see network effects more than there usually is out there. But it's hard to argue otherwise when it comes to Autodesk. For generalists like me, I think, and this example I kind of came across again and again, it's sort of like Excel. Like, if you are like a very proficient programmer and you can use like, a higher functionality software that's, let's say, better than Excel. But if you're dealing with, let's say, external, clients or external people, or even like, people within the organization who probably are not as good as you are dealing with, like, software tools, then you kind of want to lean towards more what is industry standard, right? What everyone, knows how to use. So for a up and coming startup, if they really want to encroach into Autodesk space, it's a very chicken and egg problem. Like, they have to kind of at once convince a lot of people together to switch to a competing product, right? So there's definitely network effects, element of network effects for Autodesk products, especially for AutoCAD, Revit, and things like that.
And if I remember correctly, I can't remember if I read this from your thing or from some other anecdotes that I was reading when I was brushing up, but I think a lot of contracts, like if I'm if I'm an engineering firm and I hire an architect to do this, I think a lot of contracts specifically state that the files have to be delivered in Autodesk format. Am I thinking about that correctly? Obviously, that's
they have a format called .dwg file, right? So yes, and so that's part of it. And it's funny because Autodesk shared this data like on LinkedIn. So people have like 7 million people listed Autodesk as their skill, and 1 million people mentioned Revit as their skill, right? And the next best is like 250,000, right? The competing products, or 150,000. So there's like a huge gap between the market leading like industry standard and kind of what you expect to see if you are dealing with an industry standard versus, let's say, much small or like like a up and coming product. So there's a huge gap between, let's say, Autodesk's products like Revit and AutoCAD, and then the like next set of competitors, which are kind of like packed together. It's not like the second alternative, the difference between second and third alternatives are huge. It's not the case. They're like bunch, like they're kind of bucketed together and like kind of neck on neck of all the competing alternatives. So there's no like clear winner, even like even for the like competing alternative, right? So there's Autodesk, and there's like all the rest in like after like 6 feet deep. So that's how you kind of realize that Autodesk has a huge stronghold in this, at least in the AEC market, which is basically architecture, engineering, and construction market, compared to any of the potential alternatives.
Great. So I think almost just by letting the conversation flowing, I think at this point we've probably done a nice job of establishing like kind of the moat that Autodesk has built around their products. Do you think there's anything? We're going to go into other upside things in a second, but do you think there's anything about the moat or just how strong the Autodesk business is that we've kind of missed in this initial discussion?
Yeah. So when I think about Autodesk, it's almost like two different companies, like within a single company.
Yep.
So at one hand you have AEC. So let me just go back and probably explain a little. So Autodesk basically reports its revenue in like 5 different segments. So one is AEC, that is architecture, engineering, and construction, right, segment. Then is manufacturing, design and manufacturing. Third is media and entertainment, right? Fourth is AutoCAD and AutoCAD LT. LT is basically the light version of AutoCAD, which is cheaper but also provides fewer functionality. The reason they, although AutoCAD is basically part of AEC, like most AEC professionals use AutoCAD product, but it has like wider functionality. So even like design and manufacture would also use some AutoCAD products. So that's why it's like reported separately. And so that's like the fourth, and the fifth one is basically the others or miscellaneous, right? And so if you think about like AutoCAD and AEC is like in a single bucket, again, let's imagine that's like a one company, AEC and AutoCAD. And that's basically almost 70% of the revenue, right? And 20%, roughly 22% is basically design and manufacturing. 6% is media and entertainment. And whatever that is rest, that is others, right? And, it's very strange when you kind of do a deep dive on Autodesk. It almost feels like they have a very different DNA within that Autodesk company for AEC and AutoCAD and design and manufacturing, right? So in design and manufacturing, they are the laggard, right? They are trying to kind of compete with Dassault, SolidWorks, and PTC, and AutoCAD is basically the third player in that space. And and like AEC and AutoCAD, they are like the quasi monopoly, and like they have a very strong hold, and so they have a very different approach in terms of how they think about these two markets, how they kind of go to market, and how to approach, like dealing with customers. So when you talk about modes, it almost feels like we need to have separate discussion for AEC and like manufacturing. So I guess the kind of discussions that we had so far is largely relevant for, let's say, AEC and AutoCAD, and not as relevant for, let's say, manufacturing. And the way AutoCAD thinks is like they believe, they're going to be able to protect AutoCAD and AEC. It's already in the bag, and it's like a very high margin, segment for them. And this is that's driving like 70% of their revenue. But Autodesk believes for them to grow faster, they have to kind of be a much bigger player within the manufacturing sector, right? And their approach is very different. It's almost like an startup mentality that they have within that sector. And they came up with this platform named Fusion 360. And when you see the functionalities Fusion 360 provides, and compare like on an apple-to-apple basis to competing products like in the Dassault's SolidWorks or PTC, the price point is just ridiculous, right? So it's almost like 15 to 20% of what the competing products are charging, right? So the idea is the idea is not very different from Autodesk perspective. So although Revit is kind of has a quasi monopoly at this point, that wasn't the case like 20 years ago. So 20 years ago, they started, Revit was a small startup, and Dassault's Katia and like, Bentley, Graphisoft, those were like the leading players at that point in the building information modeling space, which is where Revit is dominant. And Revit's approach was to collaborate and work with a small set of customers and really, serve that niche so well that you end up becoming like, attracting a lot bigger customer set. It's sort of like the classic innovator's dilemma, like Clayton Christensen talks about in his book. And they started with a niche, and the competing products of like Dassault's, Katia, or like other companies, they were not willing to lower their prices, right? They were charging the tens of thousands of dollars, and Revit was basically a fraction of that compared to competing products. So over a long period of time, what ended up happening is Revit became the industry standard, and and the other players kind of lagged so far behind. So they're trying to do the same. So Fusion 360 arguably is a better product compared to competing alternatives, but it charges like 15 to 20% of the competing products, right? So it's obviously not as high margin product or as high margin like segment for Autodesk compared to AutoCAD or AEC. So the idea is basically milk AutoCAD and AEC as much as you can and reinvest like aggressively into the manufacturing segment. And the bet is that they will be able to protect the AEC and AutoCAD segment. And in the meantime, and simultaneously, they will be gaining share, which is what they are doing. They have been outsold. They have been outselling Dassault for last 3 quarters in unit, as a unit perspective, not in terms of revenue dollar, because like I said, they charge like 15, 20% of the competing alternatives. So overall, I think I would strongly suggest anyone who is listening to this to go and read Berenberg's recent design conference transcript. So Autodesk participated in that conference, and they kind of laid out their strategy and elaborated like deeply how they think about Fusion 360 and why they think they would be able to encroach into manufacturing space and be able to compete with Dassault, SolidWorks, and things like that. They did a pretty good job kind of outlining their philosophy. And the point about switching costs that we mentioned for AutoCAD and AEC, that's true for Dassault SolidWorks as well. Like so I had the same question, like why would Autodesk be able to kind of encroach into SolidWorks space. And obviously Autodesk also understands that. And the way kind of they're building the platform is they're not trying to convince people to switch, right? They're saying, we have built a platform that you can use SolidWorks as well. Like if you update your SolidWorks model, that can also be updated automatically into Fusion 360.
Yep.
So you start using Fusion 360 for some projects, right? Or some like some parts of the project. And I guess the philosophy, the idea is once you start using it, you see that it's a better product. You see that it makes more sense to kind of incrementally increase market share for the future projects. And once you do that overall, if you do that for a long period of time, like 5 to 10 years basis, all of a sudden you can become the industry standard, which is what they have done with Revit, right? I don't expect it to be easy. I don't think the market is pricing Autodesk in a way that they are going to be winner in the manufacturing space. We don't have to believe in that to, let's say, buy Autodesk at this price. But it's a nice little possibility, optionality that if it pans out, that can be pretty significant.
So as you did in your write-up, you addressed a lot of the bear points that I was going to bring to what you were saying earlier. But let me just back up a second. So basically, with the Fusion product with manufacturing, they're trying to do what they did with Revit about 20 years ago, right? There's legacy players who charge a lot of money. They're going to go after the lower to middle end with a better product that's priced lower, try to take share, and then they'll use that and grow over time and eventually kind of subsume it starts where the other products price 5x as you and you're better, but you've got a lot less distribution. And then all of a sudden, once you've got 40% of the market and you're 20% of the cost, that legacy player is in a lot of trouble, right? Because people are fleeing from them left and right. And if they cut their costs, they destroy their whole business. It's a really weird thing. So I guess my 3 questions here would be, my first question is, it sounds like Dassault, their competitor, and them both combine manufacturing with, the architect Autodesk side. Why do these two businesses belong together? It seems like these are separate businesses attacking separate markets. Like they are software and design, but it seems like architecture and manufacturing design should be very separate. So why are they together?
No, so architecture, construction, and engineering like a separate segment, and design and manufacturing is a separate segment, right? So
why are they together under one roof? Because it's not just Autodesk that does this. Their competitor has these two segments, right? Are there synergies? Is there software synergies? It doesn't seem like there should be, but obviously, if everybody's got these two businesses under one roof, like what's the advantage there? And that would also apply to if there are synergies, then the synergies with Autodesk being largest, and it might help kind of drag the small one up over time, if that makes sense.
I mean, there is an element of synergy in the sense that, and that's why I mentioned, like, AutoCAD products are used not just by AEC professionals, but also like design and manufacturing and like, media and entertainment and some other, segments as well. So there is an element of synergy, but it's not like a significant part of it.
Okay.
But I think, what probably many of these companies thought, like, once they kind of, got better in a particular, industry or segment, they thought about adjacent industries or sectors they could get into for future growth, right? And that's why probably most of these players ended up going after these adjacent sectors.
Okay, so then the other thing you mentioned is with Fusion, they're trying to attack it and they're saying, hey, you don't have to give us all of your products at once. Use a couple products, use it for we're a lot cheaper, just try it. And we can take the other people's, anything that you start in the other people's formats, we can take them and put them on. And I think your most obvious question is, okay, if they can do that with manufacturing, why can't someone come along? Why can't a competitor come along and do that with Autodesk on that AutoCAD side, right? Like, hey, yes, everybody uses AutoCAD, but we're fully compliant with them. We integrate. Use us for cheap products. If you're a startup looking to save a lot of money, use us because we're compliant and people can switch into AutoCAD easily. So why isn't what they're trying to do in a different business a risk to their core business?
It is a risk. It is a risk. And I think, when you today shared on Twitter, you are going to chat with me and someone, I think, posted a question like, 10 years from now, if Autodesk is 50% down, what happened, right? Yep. And my answer would be, most likely what happened was Autodesk neglected AEC and AutoCAD segment so much, and the customers ended up being so angry at them that they ended up going to competing products, or let's say someone else kind of came up with a better product that kind of solves these issues that they have. Uh, right now, Autodesk is definitely try. Autodesk has absolutely no incentive to kind of make it compatible, right? So it is other, our competing companies' incentive and like owners to kind of come up with a product that is compatible with Autodesk or AEC, right? And that's a possibility. That's a potential risk, and that is why I also mentioned this in my write up that. Autodesk should not really test the limit in terms of how much like mode they have on AEC and AutoCAD segment, and part of the reason they did was they were transitioning business model from legacy perpetual licensing model to subscription model. So the revenue was definitely was not there, took a beating. And if you think about like the income statement, like the as a percentage of our revenue, R&D was like 40%. Sales and marketing was also like 40%. So if you look at Autodesk's income statement in like the last 5 years, it looks pretty messy, and it looks pretty, it doesn't look comfortable for anyone. Like if you just superficially go through the income statement, right? And don't consider the fact that they were actually transitioning a mod, from legacy to subscription model. So, and Autodesk, also provided some long-term free cash flow guidance to kind of calm investors that we know what we are doing. This is the way to go, and this is the future. And I absolutely agree that this is the future, and this makes a whole lot of sense to move to subscription model. But at the same time, what happened is because of those like long-term free cash flow guidance, they were very cautious in terms of managing expenses. So they were kind of they were going after manufacturing, which required a lot of R&D efforts, a lot of sales and marketing efforts, but they were not doing as much for AEC, right, or AutoCAD segments. Hopefully, once kind of this building transition is complete, and I mean we're almost complete. It's pretty much complete by this point. So hopefully, going forward, they will go back and start investing with Revit and AutoCAD and AEC segment overall. And the reason I'm hopeful is in last year, middle of last year, there's like something like 15, 20 architecture firms based in UK issued a press release for Autodesk that they have all these complaints about Revit and Autodesk about in terms of pricing, in terms of like this business model transitioning and all that, and that may sound like may sound pretty ominous for shareholders, for customers, for everyone, or for every stakeholder. But I think in the long run, that's probably that will prove to be very helpful for shareholders, because now Autodesk knows that they cannot neglect as much as probably they did for AutoCAD and AEC, and within Autodesk AEC employees were not overjoyed how much Autodesk was focusing on manufacturing for like future, which is in my opinion the right decision. They should focus more on manufacturing, but at the same time, if there's a balance, which perhaps Autodesk missed a little when they were focusing too much on manufacturing. So hopefully, going forward, they will kind of make that balance clear and make that balance more conducive for customers and shareholders. And if that's the case, I think it will be even harder than it already is for competing products to kind of encroach into Autodesk space. And what's really encouraging, despite the fact that there has been all these complaints from customers, and Autodesk was gaining share. Like other alternative Procore, which I think is has already. I think he has already. It's filing for IPO, and basically their revenue expansion rate was 120% for the last I think 2-3 years, and Autodesk has been around 125 to 130% within AEC. So it means that they're not losing market share. And I actually talked to someone, a buy side analyst, who talked to those like architecture firms that wrote that letter or press release, And basically they pretty much told that analyst that they could not get out of Revit if they wanted. They
Yep.
tried and they all came back because it's just too cumbersome. It's just too complicated. And yes, I think even an article that I was reading basically mentioned that they could not find a single architecture firm that actually moved away from Revit. So
And
you can
there's
understand how entrenched the product is in that industry.
And there's almost no better sign of, like, we can discuss all we want, the hypothetical switching cost, but there's almost no better sign of a moat in a business that is sticky, where your customers come out and they say, this product sucks, it's overpriced. They put, like, multiple firms get together to put out a press release. And then you go talk to them like, so you guys left the firm, right? And like, oh no, we could never do that. It'd be way too difficult for us. Like there's just no better sign. You mentioned the long-term free cash flow guidance, the investments and stuff, and I want to talk about those in a second, especially when we get to the bear case, actually. But I do want to talk a little bit more about the upside. I think there's two upside cases, potential upside cases we haven't talked about so far. The first would be, I mean, look, Autodesk owns the architecture and construction side. Like we've talked about, again, we just talked about how people can't switch off. I can't remember where this idea got planted. It might have been the Scuttle blurb right up, but Microsoft has constantly used their distribution dominance to launch new products, right? Like historically, Internet Explorer, you think Microsoft Outlook. The new one is Microsoft Teams has taken so much share from Slack because they integrate into everything. If you're a business user, it's just very easy to use Teams, right? So I think a lot of people think the long term for Autodesk is some type of construction cloud, right? Or architecture cloud, where it's not just using Autodesk, they use it to just expand into all these things, and they kind of own everything construction software as a service. How do you think about that type of, obviously that's very pie in the sky, kind of ephemeral, but how do you think about that upside and the possibility to get there?
That is the dream, right, for Autodesk shareholders, that it eventually turns into Microsoft of this construction industry. And I like to think that's not a pie in the sky. It's probably in the realm of the possibility. And part of the reason is, and like for any, I think companies or for any, I guess, investment, a lot depends on management, right?
Yep.
And when I think about what's going to happen for the next 10 years for Autodesk, I built a very conservative model. And as per my model, that's Autodesk will probably generate like roughly $32 billion of free cash flow next 10 years. So that's like more than half the market cap of Autodesk right now. So that's a lot of free cash flow that you have to either deploy or buy back shares, like things like that. And my guess is they'll probably not be super aggressive in terms of buying back shares. So there will probably be a lot of acquisitions, a lot of tuck-in acquisitions, right? So that's why I mentioned that the lot will be dependent on management's capacity and ability to kind of make those tuck-in acquisitions, integrate to that current platform, and continue to deeply penetrate the market across the globe, right? So that you become sort of the Microsoft of the engineering and construction sector, manufacturing sector for the world. To what extent? And it's not a risk-free thing. When you do those acquisitions, like on a yearly basis, once or one or twice, you also increase the integration risk, right? Yep. So that's why it is dependent. Probably like most investment in this SaaS space or in the software space these days, it's dependent on the management capacity to kind of deploy all the free cash flow that will be generated. And I've spoken with a bunch of people on Andrew Anagnost, the CEO, and he's widely loved. He's widely revered within the industry and what he has done with Autodesk. He has been with Autodesk since 1997, I think, and he's been CEO since 2017. So he became CEO, and he kind of turbocharged this business model transition process from legacy perpetual model to like subscription model, which in my opinion requires fair amount of courage, because you are destroying the look of income statement, and like it looks pretty messy. And unless you're really confident that this is the way you should go, and unless you have a sense of ownership, right? That, I want to have a legacy, I want to leave a mark on this company by doing what's great for this company in the long term. And probably, he could have done probably something like, keep the legacy model, grow like, high single digit rate, and like 3-4 years down the line, he retires and that's it, right? But he chose not to do so. So my guess is it's possible that and given his reputation, I definitely I'll be rooting for him that he will be able to kind of do this tuck-in acquisitions, being able to integrate that. The possibility of being a Microsoft for this industry may become a reality maybe in the 10 years from now.
Well, so actually the last thing I was going to talk about was capital allocation, and you you front ran me again. So let's actually stick on the management, right? So you say management's beloved. Management's loved. He's been with the company for a long time. Everybody likes him. It's tough to look at the Autodesk share price from 2017 to 2021 and really criticize anything he's done, right? But I'm going to try. I look at him and I say, hey, the switch from from license to subscription started before him, right? So it's not like he's the one who drove this. In many ways, he's reaping the fruits of that past success. And I think the biggest red flag I saw when I read the report is R&D spending at Autodesk peaked in FY16, and then it came down for the next 3 years. And it started to come up again, but as a percentage of kind of sales or opportunity here, it's nice that R&D has kind of scaled as the company's grown. But when I think of a growth company like Autodesk, seeing R&D come down this much, this quickly, like it does raise red flags. And you mentioned the free cash flow target and how they're cautious on expenses so they can hit that free cash flow target. Like a lot of bells are ringing in my mind saying like, hey, this is how past tech companies have kind of gotten into trouble, right? They've focused too much on optimizing and engineering their financial statements versus actually delighting customers and actually growing business value. So I think that would be my first and biggest pushback. I was very broad there, but I'll just flip it over to you. How would you respond to that pushback?
Yeah, no, that's a valid pushback, and I mentioned a lot of it in my write-up as well. I was not pleased to see this long-term FCF guidance. Like, I intend to be a long-term shareholder for Autodesk, and I really don't need to know what they're going to earn like 2-3 years down the line for free cash flow. Like, I would like to think that that's part of my job to kind of figure out, right? What's the potential earnings power is.
I don't disagree with you. It's funny, like I don't disagree with you, but at the same time, anytime one of my companies comes out and says that, like it does kind of excite me, right? Like one of the things that got me excited about Dropbox was I was like, oh, this is a $10 billion company, and they say they're going to do $1 billion in free cash flow in 3 years. Like that's pretty cheap. That's pretty interesting, right? So it's funny how it cuts both ways. But sorry, I interrupted you. Continue.
Yeah, I mean, it's probably hard to kind of put a blanket statement there because. Yeah, I mean, let's say if your company is not appreciated enough by the market, then you have to kind of teach the market, hey, that's FCF potential like 3 years down the line. Like what you guys are doing, right? So, it's probably fine if you kind of nudge the market to the direction you are thinking.
But you worry about IBM's what pops into your head, right? Like they always had that EPS roadmap, and I think even Buffett bought in on that, right? But they basically blew it's not bankrupt, but they destroyed any hope that company had because everything they did was we need to hit the EPS target. And again, they forgot about the business, all the cash went into buying shares so they could hit their EPS target. But financial engineering, I love financial engineering, but if you're not getting the business right, you're just kind of levering up a zero.
Especially in the technology sector, like, if you are focused on financial engineering, you're probably not going too far, right? Yeah. So here's how I think about, this potential issue is I don't blame Andrew and Agnost or the senior management for providing financial FCF guidance, let's say for 2020. So in 2017, they had this investor day and they provided this, 3-year FCF guidance. I think that makes perfectly reasonable sense to me because they are undertaking like a huge business model transitioning. Like, you're right that, he basically turbocharged the process that was already started, but he basically made sure that it's a successful transition from what was started. And I would say, that was perfectly fine to provide 2020 free cash flow guidance. I did not quite enjoy having that guidance for 2023, right? Uh, and if they again put out, like, if they have like another investor day in 2023 and they provide another like 3-year guidance, uh, I'll probably enjoy it even less, right? I think, once you kind of, once your business model transition is complete, I think the like, the biggest fears are gone from investors mindset, right? So right now we kind of know, we kind of understand the earnings potential this company has. So you don't have to tell me, like, you don't have to like put down a specific number. Like, they have provided 2.4 billion free cash flow target for 2023, financial year 2023, right? Which is January 2023. uh, like, does it really matter if they have like 2.2 billion or 2 billion? I wouldn't worry too much if they decide to, what, we need to ramp up my investment in Revit, right? So that we can milk it for another 20 years, right? That's perfectly fine by me, right? But if you have like 2.4 billion target, it will be harder for you to kind of do that, right? So I definitely did not enjoy having that guidance, and I would, like I said, I would enjoy it even less. Uh, but I think, they probably felt, there's also an interesting dynamic because COVID happened in 2020. Their investor day was in June 2020, so we are still kind of reeling with what COVID will happen, what the implications are, and there's there are a lot of bear cases out there in terms of end market softness and how that will impact, let's say, Autodesk, and whether the long-term free cash flow is lower than many people think. So maybe management felt the urgency and need to kind of calm investors' nerves that despite all these, uncertainties around COVID and construction sector, we may still be, we are still on track to kind of, hit those lofty free cash flow target in the out years.
Let me ask you, so 2.4 billion in free cash flow. I don't disagree with you. Like, I think free cash flow, I think providing a financial target is always hard because, as you said, like, if you have an investment staring you in the face that could return 50% return on capital, but it's going to cause your free cash flows to go from 2.4 to 2.2 billion in 2023. Well, if you make that investment, you can go communicate it to the market and say, hey, here's why I'm doing it. And a lot of people will do that, but you have just hurt your credibility a little bit. And you do, like, you've anchored in your mind, this is what I'm going to do. So you might say, oh, maybe it's not a 50%, maybe it's a 20%. Maybe, so I'm with you. What would you prefer if they're going to give long-term guidance? Would you prefer, hey, this is just what we think the business can look like in a steady state in the long term? Is that what you prefer? How would you prefer companies provide a long-term framework to shareholders?
So if we talk about it, it's hard to kind of come up with a single framework that will be applicable for every single company out there. So let me just stick to Autodesk here and tell you what I would prefer. I would prefer Autodesk to, like, I have high confidence in my mind that it will be extremely high free cash flow generating company, right? And they will generate, like I said, 30, $35 billion of free cash flow in the next 10 years. What I would like to see is, a framework, how they want to spend that money, right?
Yeah.
If it's talking acquisitions, what are the kind of gaps that they see, which is this, like within the broader construction, engineering, or manufacturing space, what are the gaps they have, and like whether the acquisitions are the primary mode of kind of making sure that gaps are filled, or whether it's going to be increased R&D, right? Or whether it's going to be, or they think they have kind of pretty much locked in, they have all the acquisitions they need, and they would just go for like a buyback spree. So, and even like when they are doing these acquisitions, I would like to know, like, what's the framework they have in mind, how they are evaluating themselves internally, right? And so just a brief framework. Think about what Danaher does, right? It's a pretty clear message they send to the market, how they think about acquisitions. And like, if you think about Danaher, like, it has always been so, like freaking expensive and optically, because market, like, investors believe in their ability to kind of do this acquisition and extract value out of those acquisitions, right? So there's a huge value out there in the market if you are building a platform, and if you have a incredible credibility that you can acquire companies and extract value out of those acquisitions, right? So those sort of messaging will be more fruitful or more encouraging for me than, let's say, a particular free cash flow. I mean, I think if you spend some time on Autodesk business, you understand like this is a 30% operating margin business at scale, and it will reach a scale. The real question is, whether they will be able to protect their AEC moat, AutoCAD moat, and how fast they are likely to grow within manufacturing space. And those are the questions that people really discuss, or people should discuss. What's their like FCF margins? Like it is a 30% operating margin business, and there's like very few doubt in my mind when it comes to profitability of the business.
Yeah, I just want to comment on that, and not to get into turn this podcast into a long-term targets podcast, but like you mentioned Danaher, right? And I do agree with you, and the market has given them credit. And another one I think about is Constellation Software put out and Constellation Software, for my American friends who don't know, including me, they are a software roll-up up in Canada, one of the best performing stocks of the past 10, 15 years, I would say. And over the summer, they put out a letter that said, hey, we've been holding ourselves to, I'm going to pull numbers out of my butt here, but we've been holding ourselves to, we will only make an acquisition if it can do 30% return on capital. Right. And that's meant that we can't make some of the larger acquisitions because maybe we're seeing a $50 billion acquisition that we think is a 22% return on capital.
Yep.
And we pass on it, but 22% return is great, right? So they put out that letter, and I remember a lot of people were saying, Constellation is a buy because they just increased their acquisition target, and this is a company that you want to do.
Yep.
You want to do acquisitions, they're going to do great. And I agree. I would agree with that. I don't have a position, but I would agree with that. But at the same time, when you're talking Danaher and Constellation, you do think, oh, the flip side is the Valiant, where, Valiant 5 years ago, people would have said, oh my God, like do acquisitions, take all of our money. You are the best acquirers in the pharma space we've ever seen. And obviously that blew up, and there's plenty of other famous roll-ups. So there is a line there, and it's tough to, I'm not sure, probably management ethics and stuff come into it, but I'm not sure where the line is. I didn't really make a point there. Anything you want to add to that, or I do have more questions on Autodesk?
No. I hear your argument. I mean, in many cases in investing, I think there are almost opposing statements, right? And both can be valid, right? And that's why we kind of have to kind of look into a case by case basis, right? And that's where the stock picking skills and like those sort of things have still value in the world out there. So yeah, I mean, by no means I'm saying that it's a given that they are going to be Danaher, Microsoft, or Constellation Softwares of the construction or architecture world. We have to keep our eyes open whether they are going to be Constellation, Danaher, Microsoft, or a Valiant, right? So I mean, Autodesk is yet to be generating all those big free cash flow numbers that I'm talking about. They generated like $1.23 billion last year. They'll probably do 1.6 billion next year, like this year. So those are not eye-popping numbers. Those numbers will come probably 2-3 years down the line. And once those numbers come, I think we will have a better understanding how they are really spending those free cash flow. And depending on how they choose to spend, we may have to kind of update our belief positively or negatively, depending on how they choose to spend.
Let's talk. So a big piece of Autodesk, and I can see how it could be part of the bear case as well, but a big piece of the bull case for Autodesk is this thing called non-compliant users. And a non-compliant user is a person who's using Autodesk. They're basically the Netflix user who borrows their neighbor's password, right?
Yeah.
And Autodesk comes out and says, hey, there are 7 million non-compliant users who are using our product multiple times per month and who aren't paying anything. And a big upside is, hey, we're going to get those 7 million users on. And I think you even described they could use the nuclear option where they just say hey, all this non-compliant software. I don't know the math, how they would do it, but basically shut out all the non-compliant software next day, and everyone would either have to go use a competitor, pay it for Autodesk, whatever. So I guess my two questions on this would be, A, why is that a nuclear option? Why would forcing non-compliant users to pay be a bad thing? And then B, I mean, everybody's been pointing to the non-compliant users as a bull case, but as a bear case, if so many people can use this for free and so many people, and you feel like using the nuclear option actually would be bad, like why is there so much upside in the non-compliant user? And doesn't the fact there are so many non-compliant users who won't pay, doesn't that show that Autodesk might be butting up against kind of the limits of their pricing power? So flip it over to you.
Right. So they actually, like, just to give you a context, currently they have 5 million paying subscribers, right? And they actually think roughly 12 million non-compliant, non-paying subscribers out there who they think are potential target. Like the actual number is actually more than that, like 15, 20 million probably. But those are probably not as regular in terms of using the product, so maybe they're not really targetable. But Autodesk thinks there's like the number you mentioned, 7 million. These are the 7 million customers who have used Autodesk products 11 plus times, right, in the last 90 days, and they have used like the version that has been released like in the last 1 to 5 years, right? So they are definitely the primary target. Like they are the most likely to kind of convert from non-compliant, non-paying customers to paying subscribers. But obviously, they're not the only set of customers. So Autodesk thinks overall, I think it's probably 12 million customers that are potentially reachable. So just think about.
And just again, their current base is 5 million. So
yeah.
Their current base is 5 million, and they think there are 7 million who use these frequently, and in total 12 million who may at some point they be able to. So I mean, we are talking the huge numbers of non-compliant.
Right. Yeah. So it's a huge number out there for sure. And I mentioned in my write-up, like if you just convert like even 15, 25% of these non-compliant users, you are looking at like 30, 40% of last year's revenue, right? Which is like your product. Think about you are releasing a product, and there are millions of people out there who are using it, and you are getting absolutely $0 out of it, right? So and yeah, I mean, like you said, some people think about this is the bear case, right? That they can't get any revenue out of this all these users. So the reason Autodesk does not want to use the nuclear option, and I feel the same even like while building like my subscription business, right? Internet is all about scale, right? You should always lean more towards reaching scale than, let's say, thinking about how much I can really charge for this service, right? So you would always want to in any internet business, you should always leave money on the table, right? As long as you have this sense that there is a potential bigger market out there, right? And for Autodesk's case, and that market has been the people who are not paying anything to them, right? So that they can remain the industry standard, right? So if they use the nuclear option, think about the user base is actually larger than the paying customers. So if all those users decide to go to a competing alternative who are not as stringent, then even the paying subscribers may have reason to kind of go to that customer, right? So
that's a great point. That's a great point.
Yeah, they have to be very cautious in terms of how to approach this. Like, and if I discussed some strategies that they currently use to kind of convert these non-compliant users, and those are really a nudge, like not something. Hey, you are illegally using my product. You should be in jail. Like that is not the attitude Autodesk has. Autodesk is like, hey, you are using my product anyway. Would you like to use the latest version, right? And pay the subscription, right? So it's a very little nudge that they are going to use. And there are lots of low-hanging fruit that they were not using. So for example, student licensing, which is free, right? And earlier it used to be, once you have a student license, it used to be for 3-year period, right? And right now they have to update on an annual basis.
My wife is making her first appearance on the podcast. Alicia,
okay.
Wave to the video subscribers if you want to. Sorry about that. That was our first appearance, but
no problem. Yeah. So So and there are also things like so they are going they're pursuing more and more direct sales rather than like resellers. So earlier what used to happen is resellers, like they have some target and commission and all that, and they would go to the end customer and they would sell, let's say, 5 seats, and look the other way, allegedly look the other way if the customers actually are using, let's say, 8 or 10 seats, right? But for Autodesk, the more and more Autodesk goes direct to the customers, those possibilities will also be, diminished. So it's not. I don't think, I don't expect that Autodesk will be able to convert 80% of them, right? So it's going to be a low number. But once you have like a subscription model, and think about, in earlier you used to pay the whole license for the whole license, right? So that's a lot of upfront cost that you have to deal with. Now you are like, you're using the product for 1 month and see, oh, there are a lot of new functionalities that I was not using. So, then you use it a little more, and then you become kind of used to it. And that's much more likely. And also the other thing that I want to mention, it's not about just non-compliant users. It's also, there's like also 2 million legacy compliant paying customers, right?
Yep.
That Autodesk is trying to convert to paying subscribers. So that's probably 50 to 75% of them are probably likely to convert to be paying subscribers. So there's like 2 levers here. One is non-compliant users who don't pay anything, and there are other set of customers who paid at some point to Autodesk, but they just don't use the latest version, or they're just lagging behind in terms of the new functionalities, and eventually they will be paying subscribers at some point.
Yeah, no, I just love the point you made about, hey, these paying subscribers, like if they went nuclear, that would actually be an opportunity for competitors, because maybe they go to a free competitor and all of a sudden it's not 12 million people are in this ecosystem, 7 million of whom are non-paying, 5 million. It's 7 million might go over there, and you've almost destroyed your ecosystem, right? Because the 5 million paying might look and say, oh, we used to get value from those 7 million, right? Because it's an ecosystem, and now those 7 million aren't here, the ecosystem's diminished. And I think of Netflix with password sharing. Recently I think they're starting to crack down a little bit, but for years people said, 5 people will use a password. Why wouldn't anyone? And yeah, it's an issue, but it also takes away a lot of oxygen from other competing services where you can share one subscription among 10 people, and you get extra data that way. You get if somebody comes out with a new product, all 10 people look and say, why would we go sign up for that new product? We're sharing one Netflix. So I love that. I'm cognizant of time here, so I want to end with the last bear case, and that is just a flat mathematical valuation. You mentioned it several times. This is a 30-year-old business, right? More than 30-year-old business that is trading at 15 times forward revenue, and the business has gotten better. The growth has been good, but 15 times forward revenue for a 30-year-old business, that's a pretty strong multiple. 50 times EBITDA? Again, a 30-year-old business. I think it's 25 times their 3-year out free cash flow number that they target. None of these are cheap numbers, right? So if I told you, hey, I'm convinced this is a good business, but my goal is to outperform the stock market, right? Like, why is buying Autodesk at these multiples? How am I really going to outperform?
Yeah. Bill Gurley had a great blog, which is probably had 10, 12 years ago. All revenue multiples are not equal, right?
Yep.
So, or maybe something like that. I may be misremembering the exact title, but that's like the probably the gist of the title. And that's exactly it for Autodesk as well. Like, think about what you are buying. When you are, let's say, buying Autodesk, you are buying an asset that has that derives 70% of their revenue from a segment where they have quasi-monopoly, right? And it has and even the one where they are competing, it's an oligopoly, right? So it's like the whole ecosystem is basically oligopolistic to monopolistic, right? And it's a 90% gross margin business, right? So to me, and it has like pricing power, it has high switching costs, it has network effects. Like when you think in those terms, it feels almost like the closest thing to superpower a business can have, right? And when you have like 90% gross margin, when you have, and plus you have pricing power, then you have a lot of leeway to kind of invest in your sales and marketing and research and development, right? And that is very hard unless management does a terrible job, right? for the competing products to compete with. And the free cash flow potential, like you were saying, 25 times 3 years from now, right? Just, I would encourage anyone who's listening to just, model the business out for like, 5-10 years, and think about, instead of thinking like, oh, right now they are generating 1.2 billion, and let's say they are going to generate 2.4 billion like in 2023. Just think about what you have to assume from 2023. Let's imagine they hit that number, 2.4 billion in 2023, and then model it out. What you have to assume from 2023 to 2030, let's say it's that 7-year free cash flow CAGR, right? It's actually, pretty nominal, right? Like as per the current market price, market is expecting basically 7-8% free cash flow CAGR, which I believe it's pretty low. Like, they have pricing power. So for 4 to 6% of growth, top line growth, that can probably continue for 2 decades, right? And this decade will probably have a lot of incremental growth opportunities because of this, conversion of non-compliant users, legacy users, growing renewal base from resellers to direct sales mix, right? From higher market share in manufacturing segment. So it will probably end up like in a low double-digit to mid-teens growth for this decade. And if you think about it beyond 2030, we still have like embedded 4 to 6% growth on the top line. And if they can manage like 1 or 2% extra, we're still looking at like, 7-8% growth rates beyond 2030, right? And so in my mind, it's actually not expensive at all. Having seen some of the software businesses, it feels like, we are much closer to them, like, the potential margin state that you all talk about in the software space. We're much closer to that. Like in 2 years, we'll probably be closer to that. And beyond that, market is expecting a very plain vanilla sort of growth, which I don't think is the case. Even after 2023, I think this business has the capacity to grow at a, like I said, mid-teens, probably free cash flow CAGR. So if that's the case, market is definitely not pricing in those potentials. And even the cases of like, non-compliance, conversion of non-compliance users, these are not one-off factors. When you have like, 10, 12 million of people who are not paying you anything, it will take time, and you are not willing to use a nuclear option. It will take you years to kind of, nudge those people and come to your ecosystem to be a paying customer. It will take a long time, but it will happen gradually, which will probably continue way beyond 2023.
Yeah, no, I just think that the coolest thing is 7 million non-compliant users who are using this multiple times per month versus a 5 million paying base. And, that just over time capturing that, there remains so much optionality from capturing that. And yeah, you're never going to capture 100% of it. You might not even capture 50% of it. But, if you capture 10% of it, it's enormous versus the current financials. And that's going to be basically 100% profit, right? Because, anyway, I think we've covered a lot. I think this was great, but I do want to, is there anything that you wish we had hit on, you think we kind of missed? Any last words or last thoughts from you here?
No, I think we have been speaking for much longer than we spoke like last time around. So I think we kind of discussed all many different aspects.
Well, look, last time we were getting the free version of you, but this is you with a paid service to sell. So we got to dive a little deeper, spend a little more time on it. Well, look, again, I've been a real big fan of the subscription service. It's very reasonably priced. What is it, 120 a year, 100 a year? I can't remember.
100 per year.
Yeah,
it's per month.
Priced. Look, if you get one Autodesk and you get it right, it's going to pay for itself many times over. So I think anyone who listens to this podcast and enjoyed this would really enjoy a subscription. Looking forward to having you back on in the next couple months when you put out another one and you're ready to chat. But Abdullah from MBI, Mostly Borrowed Ideas, thank you for coming on. Looking forward to having you in the future.
Thank you so much, Andrew. I've enjoyed speaking with you again and hope to come back sometime in the future.
Fantastic.